Hey, welcome back to another episode of Johnscryptotherapy. Today I'm excited. We're going to go through Ecomi. I want to show you how I get in and out of trades, guys. This is going to be really great. If you watch this video to the end, 11% move towards the upside if this structure breaks. And I want to show you how to enter the trades the right way. So first of all, we talked about my structure. We talked about we're in a descending wedge. We're seeing that volume is contracting at a local area and we're waiting for price to break towards the upside. And right here, you could see we're failing to make new lows, but on the CDV, we're seeing that we already made new lows and a lot of contracts towards the downside are offside. What does this basically mean? These guys are all sellers that are offside. That means that price is eventually going to go against them, and what they want to do is exit their position. Why is this important? This is the momentum we need to start breaking structures like 0.0003931 before we see that 11% gain towards the upside. So when you look at these top wicks right here, you can see there's a lot of buyers. So I want you guys to really go with me here. There's a lot of buyers right here that are offside. Offside basically means they bought, they got crashed, right? A lot of buyers, and then the sellers came, destroying them towards the downside. So you can see each time that price went towards the upside on the TradingView platform right here, and that price failed. So a lot of buyers were in contact with pushing the price, but they didn't have leverage. They really failed every single time. Now, what this means is that there's a lot of sellers taking over those positions, because buying does not mean that you should buy. If we had a follow through, guys, that's a whole different story. You can see these are wicks of the candle. If they're wicks of the candle, these are not follow-throughs. These are called rejections. So you don't know what a rejection is until you can see internally. That's why we use footprints to know what it is showing us internally, right? And you can see right here, there's a lot of sellers coming in after the buyers have failed. After the buyers have failed here, you can see tremendous amount of selling came in. So that means this leverage or this area of buying pressure is not able to break above this structure. That's how you know you have found a zone that is strong and is very willing and to hold levels like these buyers from pushing a little bit higher. So I want you guys to understand your footprint charts can absolutely help you to determine where the buyers are and where the sellers are and who's truly in control. So when I come back to structure here, I want to show you my game plan, my key element of what I'm going to do. Also, I've mentioned this in my Telegram group, so if you guys are a part of it, you can see this was an entry we already taken, and we're already up 7% or so. And if you are watching this video, please take some notes, write this down, and this will help you in your trading game. Remember, it's not financial advice. This is what I do for my students and what kind of education I provide for them as well. So let's get back into the subject at hand, okay? So what I noticed here is there's a lot of buyers failing towards the upside, roughly around these levels right here. Do I have content that price can break above this level? Not right now, guys. I need to see how structure is built. I need to see how price reacts once it gets to that level. And there is a high probability trade right here we could take, but we need to be a little bit patient. That's why you need to put in your alarms, set it up, and this could be a trade that you could take. So what I'm noticing right here is there's a lot of buyers towards the downside, and this is something that I do like. I'll explain this to you guys so you guys understand. We could look at the previous candle before us and we knew there was a lot of sellers. Well, a lot of sellers failed. And then the candle before that, we noticed there was a lot of sellers that failed as well. So what does that mean? Well, you could clearly see they're holding a specific level underneath the structure. Great. We have great signs. So when sellers are trapped, another sellers are trapped, what do we normally see? We want to see aggression on the opposite side coming into the markets, trying to push the price up. Now, this candle is a beautiful candle because we actually have follow through. Follow through is basically means when we have a lot of buyers, and it's not a wick, right, guys? It's not a wick. It's actually a body closing with the candle, showing us that aggression towards the upside is evident. It's here. So we need to use that in good context in the market to start buying the market. So we have CDV divergence. We're in a downwards trend that is showing us that once it breaks towards upside, we're going to have 11% gain, which we're trying to get into the markets or into our pockets. But we also notice there's a big barrier around 0.000386 trapping us from going higher, guys. So what does this basically mean? I want to show you guys how I'm going to do this. So what I'm going to be doing is I understand this is my area where there's a high amount of buyers and where two sellers already failed. There's one seller that failed, one seller that failed, and this is the buying area or the buying pool that I see a lot of aggressive buyers are defending the area. Once I see buyers are defending an area, that's this candle, guys, right here. And you see this one and this one, these are these candles right here where the sellers failed. So this one is being defended. So what I'm expecting and what I want to do, I want to see actually price come back down. Once it comes back to my golden nugget, my students all know this. I always put this in my alerts and in my signals group. Once it hits my golden nuggets, the alarms will ring in your head for profits and money. And that's the alarm of wealth, guys. We want to really create wealth, especially with Ecomi, and Ecomi can absolutely do it. It doesn't have to have 100% moves every single day. 11, 2, 3, 4, 5% moves, they add up. It's like a snowball effect. Throwing a snowball down a hill, letting it compound over time, it will absolutely do that. So what I want to see before it breaks up towards the upside, I want to see price come back down. I'm going to get into a long position right at the corner tip of this move. I want to see a nice tight stop, and I want to see price rallying towards the upside. And you know what? This is going to be our first take profit just around the 0.003853 level. Then I want to see a burst towards the upside. My final take profit for this rally is 0.00043 for the short term. Does not mean price cannot go higher. Of course it can, guys. But this is the rally that I'm looking for before we see a beautiful pullback towards the downside. So once again, I see a lot of sellers weakening. I see strength in the buyers. I want to see price come back down. A lot of sellers accumulate on the bottom. We already have CDV giving us confirmation that sellers are offside. Once sellers are offside and the price is going higher, this is a beautiful divergence. So I do understand that price can absolutely go up, guys. If it does, don't stress. The game plan is going to be simple. There's two game plans. If it breaks up and it doesn't pull back, we're looking for the retest on this structure to go back for that 11% gain. If price goes lower, guess what? We have a phenomenal move for us to rally the price towards the middle, then of course break and then go towards the upside. This is the most simplest and most powerful game plan in OMI today, guys. If you guys do like trading OMI or Ecomi and looking at the price with me, please make sure to smash the like button. And this is only going to get better as the price goes higher. Other than that, thank you so much. Take it easy and John out. Peace.